What's up, everybody? We're glad you're joining us. I'm Steven,
I'm Morris Jackson.
and this is Lending Love
Love
Languages.
languages.
So we're really excited to have all of you joining us today. As we've said before, this is a podcast for us where we want to help create relationships, and we also want to provide information in a very relatable way. So our goal here is to identify how the concepts of underwriting really tie to the lending love languages. And I've got an amazing partner with me here, Mr. Morris Jackson.
Yeah.
Morris, we're glad you're joining us today.
It's great to be here. I'm happy to not only be a host, but also the very first guest. And as you said before, lending love languages is really tailored to us really tying in the science behind how to connect the lending and the needs of a client to what banks look for and what lenders look for to meet the client's needs. So I think this is going to be a lot of fun.
I love that. I think you said it well. It is quite a science, so to speak. So before we jump into that science and how we've created those two, I'd love to just get started with a little bit of personal information. So tell me, what are your love languages? What are your top two?
My top two, to be honest with you, it's words of affirmation, right? So being told. One of my number one strengths in Strength Finders is significance, right? So feeling the sense of importance and feeling as if you matter in the world, right? And so
Awesome.
affirmation tends to really validate that for me. And then I would say the second one for me would be touch, the
Physical touch.
touch. Thank you.
Yep.
Physical touch for me just kind of reaffirm it validates the affirmation.
It's like that follow up to those words.
Yeah. Words need to have action, and so words and action come together. That's where we go.
I love hearing that. That's a great explanation of it in a way that you feel loved, which is important.
Yeah.
So today we have you on not as a co-host, so to speak, but also as the owner of a flooring company.
Yeah. It was something that me and a few partners gotten together and saw an amazing opportunity here in the Valley. And it was something that, through our due diligence and research, we just couldn't say no to.
I like hearing that. So I got a few specific questions, but why don't you start by just telling me a little bit about, like, overall, how did you feel the transaction went?
I would say it wasn't a smooth one.
Are any?
Yeah. It opened my eyes to the challenges, the difficulties, the stresses, but also the emotional drain it can put on an entrepreneur going through an acquisition. It almost reminded me of the first time it reminded me of the first time I purchased a home. It was just things I've never experienced before, right? And so you didn't know what to expect. And obviously, when you bought that home for the first time, we all remember the day before closing, there's still like 8 things the lender tells you at the last minute you need to get to them. So it creates a lot of anxiety and uncertainty and just stresses. But when it's closed, you're like, okay, I won. There is a great sense of accomplishment. That's the same way it would happen with the flooring company, yet a little more, but with a little bit more hurdles, bumps, challenges, and obstacles for us to overcome. But it was a long process. We went through deep due diligence, which took about 6 to 8 months. A lot of the due diligence had to be done in privacy, just because the seller didn't want the purchase to be known to the employees. Because if this transaction didn't go through, he was just going to continue to run his business.
Gotcha.
And so he wanted to do it with very little disruption. So the reason why for the lengthy due diligence process is because we had to really do things anonymously. We had to do things in privacy. We had to do things after hours just to make certain we maintain that privacy. Worked with the lender at the very beginning. Started off really well, got our term sheet really fast. So we were definitely excited. I mean, the business was performing really well. Year over year saw growth. Year over year saw positive growth and profitability. So on paper, as we all looked at it, there was no reason for a lender to say no. And then all of a sudden, as we probably got 4 to 5 months into the lending process, we were told that they did not want to do the deal. And so we had to go back to square one all over again, had to go out and find a new lender. Obviously, there was a lot of pressures to get this done.
Oh yeah,
Because
especially if
now,
it's after 4 or 5 months. That sounds like how a lot of our clients come to us.
Mhm.
They've worked with someone and they, aren't able to get the yes they're seeking.
yeah. So I mean, and it was unfortunate for the seller because we had to keep moving the closing date and moving the closing date and reassuring the seller that this is a transaction that's going to close. And so it was either coming in with more earnest money or just having more conversations just to show confidence. And so luckily after we end up finding two lenders that put together a package for us. Obviously because of the timing, didn't give us the pricing that we technically wanted, but it gave us enough what we needed to close. So we had to decide which route we wanted to go. And luckily for us, we found the route that made the most sense to us as buyers, and got the transaction finally closed.
Awesome. I like hearing that. Obviously, success, closing the transaction is the goal.
Yeah,
That's when the real work starts, as I'm sure you're dealing with now.
Oh yeah.
And so I know you own multiple business, but is this the first business you actually purchased?
No. Well, as an acquisition, yes.
Okay.
The first one we purchased as a business act, yes. Obviously, opened other businesses that were more startups or more of a franchise purchase, but as a business acquisition, yes.
This was the first one. Nice. So our goal here is obviously to identify, really digging into those love languages and those underwriting C's, so we speak. So let's start with the first one. We talk about character or words of affirmation, which obviously is something that's big for you. So it's a big factor for lenders too. So how did you communicate your story or vision in a way that built confidence with not only the buyer, but also the lender?
Yeah. So the first thing we did was really pulled in the story of the current owner, right? How he started or how they started, their journey, how the business has been family ran, family owned, family inspired. We talked about the team that the owner developed and how the go forward strategy would stay intact, because the people that he developed, the people that he's trained, were very self-efficient. They weren't going anywhere.
Nice.
He was just looking to part ways.
Gotcha.
But we started with that, really building a foundation of not only where it's been, but where it's at today.
Okay.
And then we brought ourselves into the actual narrative, which talked more about our experience, our team's expertise, what we plan on bringing to the table, and where we plan on with the current team taking it forward. So it was really building a business plan that had those two narratives brought together. Because the last thing we wanted to do is have the lender feel as if we were going to disrupt everything, right? Where this company was showing year-over-year growth consecutively. They were showing year-over-year growth, not just in sales, but also in net profitability. And so we wanted to show we're not trying to tweak this engine too much at the beginning. What we want to do is, get in, fully integrate, fully adopt the team, work with them on creating just little efficiencies in areas that we've saw during our due diligence, but really continue the great work that they've done here in Nevada. And then show over a course of 24 months how we're going to integrate layers of tech to help create more streamlined efficiencies. One of our partners, an amazing tech partner, so really understands how to use tech to create those efficiencies, and then also show how we're going to continue to to grow the workforce to allow us to adopt more jobs. And then with those jobs, we'll create additional revenues and cash flow and profitability to our bottom line. So really just bringing those two pieces together for the lender to see that there's a great history that we've identified that we're going to continue. Here's how we're going to support that. And then here are the things we're going to start integrating over a course of 12, 24, 36 months to help us continue to see continuous growth within the company.
I love hearing that, right? And for those of you out there listening, I think when it comes to building a story, that's foundational in any lending request, especially when you're utilizing the SBA for a business acquisition. That past, present, and future, and identifying how each are integrated together is very crucial. So I love hearing that. So next we talk about the capacity, and you
Mhm.
kind of touched on the revenue a lot. That ties to capacity. Of course,
Yep.
that's our acts of service.
Mhm.
So we know lenders want to see that you can handle a debt responsibly. So what specific steps or actions did you guys take, or did you demonstrate to show you had an ability to manage these financial obligations?
Yeah, so being able to show how well the business has always managed their debt obligations was important.
Okay.
The good thing is that the business had no debt. Any
Oh,
debt they
that's
did,
rare.
the debt they did acquire was paid off timely. And so the current strategies and the current cash flows that the business was able to produce shows that they can service any debt. And then obviously, our credit history, our ability to show how well we manage credit and how well we manage debt played a big factor into it as well. It didn't hurt that, a few of us owned our own businesses, have made significant purchases, and showing, on time and timely
Yeah.
payments on those helped out a lot as well. So luckily between, our backgrounds, our character, our capacity, but then also the business background, credibility, and capacity between those two verticals definitely help get the lender confidence around it.
Yeah, that makes a lot of sense. When you think about lenders and they see that you've done other businesses
Yeah.
successfully, you have other, operations that are going well,
Mhm.
it's really good. One of the things they just dig into the numbers significantly, right? Did you run into any issues as they started doing debt service calculation or trying to identify that? Did you really have to dig into some of the other businesses and find every penny?
Oh yeah, I mean, obviously, lenders are worried about when there is a transition like this, how much sales could be lost.
Hmm.
So we had to go in and really show these, how these long-term contracts are being, led, managed, and won by one of the operators that was staying on board. Secondly, they obviously are looking at seasonality and how we're going to overcome some of the seasonality issues that this type of industry can present. And then obviously they went back to during COVID year when things shut
Oh, yeah.
down, and how the business managed that period responsibly and how we would manage a period like that. So yeah, there was some things we had to dig into the weeds with and really understand how the company approached it, things that they did well, but also things that they could have done differently, and how we would be the team that makes certain through any crisis or through any downfall with seasonality or through even any loss of a contract, how would we go about overcoming that? And then also showing strong assumptions too, right? We had to
Those
be
financial projections.
yeah, so we had to show, based on the things that we were integrating, how we saw in other industries this created growth. So adding this layer of tech is going to create additional time in this area, which is going
Mm.
to allow us to go after more bids and so we had to kind of connect the dots to show that in the event we may, this might fall down, we have 3 or 4 other things that we're focusing on to offset that and continue to see continuous growth within the company.
I love hearing that. That's another key point that I really want to emphasize for everyone. When you're building a plan, it's not just about making this plan that sounds great and looks really good on paper. You need to make exact ties into the financial data. And we've done that a lot with previous customers, identifying here's the problems we had, here's the line item, you see it on the profit and
Hmm.
loss, and look at it now, or this is our assumption going
Yeah.
forward, right? So tying that story to the numbers is so crucial.
Yeah. Yeah.
Next, we think about receiving gifts.
Mhm.
I think everybody likes receiving gifts personally. I mean, I love to get an unexpected gift.
Lenders love to get gifts too.
Oh, well, absolutely, right? Because in their world, they think of it as capital. And
Exactly.
we're in Vegas. We
Yeah.
have the saying, cash is king.
Hmm.
But we know with lenders, having skin in the game
Hmm.
is often crucial in the lending process. And I know for a business acquisition, there's a certain percentage SBA requires,
Yeah.
depending on lender, anywhere from 10 to 15% typically. So how did your personal and business investment help show lenders you were serious about your financial goals?
Yeah. So I would say on the first off, we as a group had to come together and scrape up everything we had to put the cash injection piece into it. Right. Not only did we need to have the cash injection to purchase the business, we needed to ensure that we had enough cash to maintain, I would say, liquidity in the
Yeah.
business, to be able to get us through whether it was a year, 2 years of runway at the very least. Not that we felt we needed, but it was important to us just to give ourselves a bit more confidence and,
Yeah.
and feel comfortable jumping in. Because again, going into the business and thinking that you're not going to run into any hurdles or challenges, we're just fooling ourselves. And so we
Absolutely.
had to make certain there was, again, enough runway to allow us to integrate ourselves, get to know the team, help through transition, help through hurdles, help through challenges, but then also service the debt that they weren't used to, because we don't know how that's going to impact I mean, although we see it on paper
Yeah.
and we know how it's going to impact the balance sheet and impact the P&L, you don't trying to solve tomorrow's problems with yesterday's financials is not wise, right? So
I like that.
so we had to make certain we had a cushion and a buffer for ourselves. So again, on the personal side, we all had to scrape up whatever we had to put towards that working capital, but also put towards the down payment of the purchase as well. And then even our personal real estate had to come into play too. So
You had to put up some personal guarantees, it sounds like,
yep,
and also liens on some personal
yep,
assets.
personal guarantee. So capital, personal guarantees, liens on some of the assets that we have, both personally and on the business side. So it required plenty of skin in this game for us
You felt like
to.
you might have had some muscle and bone in there
Oh
too,
yeah,
huh?
they had our hair, they had skin,
Well, what's left at least.
they got everything they possibly could. But at the end of the day, we all reminded ourselves the importance of how much we believed in the company,
Yeah.
right? And I think that was the great thing for all four of us is we believe in the company, we believe where it's been, we believe where it's going, we believe the need here in the Valley. We see tremendous opportunities for it to grow and scale. And so it was worth kind of putting a lot of our eggs into that basket.
Yeah.
It also helps too that kind of to your point earlier, with us being entrepreneurs and business owners, it gives the lenders confidence that they can take on a little bit more of the risk and ask us not to put in as much of the risk or as much of injection as they could have asked. I mean, a lender could have easily asked for 50%, right? Or a lender could have asked for whatever they want, but we were able to get a good loan. I would say a loan to cost on the project, but it did require us to put forth again not only cash, personal guarantors, properties, and then also our experience as business owners helps as well.
Yeah, and I think that's so crucial. From lenders, they look at this perspective that if you're not willing to have the personal guarantee, if you're not willing to put your personal assets up at risk, they will look at you as not being as serious or not as being as committed to the transaction as they want someone to see, right? I think the lenders, they realize for many entrepreneurs, this is the most important financial transaction of your life. So they want you to be all in, right? They want you to be willing to risk it all. Obviously, they don't want the numbers to look like you're risking it all, but they need that seriousness.
Exactly.
I like that. So, next we talk about quality time, or in the lending world, we talk about that as conditions. And I know that's got to be one of the most frustrating part. I know for a lot of our borrowers that we work with, they express the frustration of they want what, or they need what documents now. And we know in particular, I heard you talking about COVID, right? So we know there's a lot of economic and industry conditions that can influence a lending decision. So how did you adapt or prepare your business to navigate some of those external factors and present yourself as strong candidates?
Yeah, I mean, one, it required us to, meet with the owner multiple times to really understand the business. And obviously, we had to go back and do our research. I mean, and be honest, none of us owned a flooring company before. I mean, luckily for me, though, my grandfather owned a carpet cleaning business and carpet installation. And so knowing a little bit about his industry and what he's done to make his business successful only helped a smidgen, right? I didn't own it. I didn't do it. I never worked in it. I mean, I did as a kid, but I never really worked in the business. So it wasn't really enough to give lenders confidence. So first, again, we had to show how much we were willing to actually get into the weeds and understand the business and show our ability to confidently and competently articulate what our plans are going to be for any economic downturn or any obstacles that we felt we were going to face owning the business. They wanted to know that we are aware of some of the pitfalls that could that could be presented and how we could overcome that. I would say secondly, you have to admit that especially showing a lender, you're willing to learn. And I think one of the things that we showed in our package that helped the lender feel comfortable that we were willing to learn is that we kept the owner on as a consultant for at least 12 months, and then also have the ability to extend that after 12 months. So although he's walking away, we still have him as a trusted resource within the company. And then third, having a team with the expertise and experience and how we're going to use that team to help us grow was critical as well. So being able to strategically position and show how we are navigating and using the current staff to really help drive and run the business, almost showing the internal promotions that are happening, not only help show we're going to be able to help retain the employees that we have, but also shows that the experience that is going to still live within the business to help us continue, not only manage it the way it's been managed, but also to help us grow it as well.
Awesome. So I think you already answered it. I just want to highlight it a little bit, but lenders are always wanting to know, like, who's going to be the key man is the term in it. And it sounds like there was no key man on this team that was buying it. None of you had a decade in the flooring company or anything of that. So to fit that, it sounds like keeping the owner on as a consultant for 12 months not only was good for you guys, good for the business, but it's also one of those check marks that the lender's looking for in order to get it done. Is that accurate?
That's spot on.
Awesome. That makes a lot of sense. So next we get to my favorite one, physical touch.
My favorite.
Right. And then, in the business world or the underwriting world, we talk about just collateral, right? And collateral can often provide that tangible security, not only in a relationship, but in a lending transaction. So how did you leverage any physical assets or other forms? We heard you talk about some of the stuff outside of it, but what about the business? Was there a lot of assets that were being secured with that, or was this mostly just an acquisition cost?
No, the building by itself that we purchased as well was the major asset. But then there was also trucks and equipment, but the building in and of itself was the primary asset that the lenders really helped the lenders feel comfortable with the deal.
Oh yeah, that makes a lot of sense. We know lenders love commercial real estate, and especially if you're doing an acquisition and it's more than 50% of the loan just for the real estate, that's not only comfortable for them, but I mean, you've done real estate investing as well, so this was a great acquisition for you guys in your eyes, right?
Yep, absolutely. Yep.
I love hearing that. That's so important. When we think about just going through this lending process, I'm kind of curious, what do you feel was your favorite part of it? Let's start there with the good.
My favorite part, to be honest with you, was with the lender or with the acquisition of the business.
Why don't we do both?
Both, okay. I would say on the acquisition side, it was taking the time to really learn the industry and learn the people within the industry. It quickly reminds you that there's so much within this world we don't know. And there's so much in this world that we could get to learn and have the opportunity to learn. And so being able to learn from industry experts that are currently there today, even learning from the previous owner, again, knowing their journey, knowing what they've done, seeing how they're winning business, seeing how business keeps coming back because of the quality work that they do, understanding, how inventory management works, and understanding how, how they lay out a project, and understand, and making certain things are happening in a very succinct way. It's just, there's so much there, buying inventory, making certain it's just, again, I can go on and on with everything that we've learned just from the business side. And there's still a lot we're learning today.
Oh, I'm sure.
But it to me, it's not only, it was the excitement of learning that, and even still today, the excitement of still learning it. I would say on the lending side, there weren't a lot of things I was happy with, but I would say the one thing that I walked away feeling happy with is the fact that we did find a solution. We got told no after going through a lengthy process, being believed that it was going to lead to a yes. Obviously, when that fell through, we had to obviously pre-flight this with other lenders.
Yep.
And being told no multiple times through under lenders was getting a bit defeating.
Yeah.
But then, luckily we as a group just never stopped. We kept looking for options and looking for other options, and finally found the, two lenders who loved the deal, who found the way to put the deal together, who found the way to, make the collateral side work, the capacity side work, the character side work. They found a way to get it done for us. And knowing that there's people who still care about helping people do good business, right? I think, just gave me a lot of confidence at the very end of it.
I love hearing that. And I think that's an important point for everybody out there. There's so many lenders that are truly just looking to poke holes in a deal, to find any way to say no. But what a lot of business owners don't realize is there are plenty of lenders out there who want to find that yes, who want to seek that yes. And I can tell you through Lyft and the clients that we work with, our goal is always to find, how do we find that yes? And getting that quick no is very valuable. So I am just curious, what was the time frame from when you first started, and so when you signed the agreement to purchase, right, till when you actually got funded?
It was we reached probably 13 months.
13 months. Yeah. So that's definitely on the long side of a
Very
business
long.
one. But as you'd mentioned, after 6-8 months, that first lender backed out, and that can really be defeating.
Correct.
Right?
Yeah.
Totally crushed.
And then we were facing a rising interest rate market, and obviously lending wasn't as accessible because they weren't quite sure. It was just.
That's a good point. You started in a time when rates were different, and so a rate adjustment, other economic impacts switched the way that lenders were looking at that deal.
Correct. Yep.
Yeah. So what was your least favorite part, both on the acquisition side and then with the lending side? Although I have a pretty good idea, you've already discussed the least favorite on that lending.
Let's go to the lending side, because we've already beaten that dead horse. It was being led on for so many months. That slow no would have been easier for us to get that quick no. Because 13, 14 months ago, we could have done something else, or 12 months ago, we could have done something else, right? And we've had so much invested into it at that time that we had to find a way forward, right? The stress that caused us, the sleepless nights, me and a few partners, beating our heads against the wall. It was, it was tough. It was really difficult. So yeah, that was by far the most disappointing and frustrating part on the lending side. I would say on the acquisition side, it was the constant moving of the goalpost, right? It wasn't good for us as buyers to be telling the seller, give us another 90 days, give us another 90 days. And it got to the point where, our credibility and our, I would say, character was being questioned, right? Or, luckily the seller believed in us so much, think about it. I mean, how many extensions can you give someone, right? And so it's
usually after 2, most
are
sellers
away.
are walking away.
Yeah.
They're putting it back on the market.
And the seller was so, I would say, optimistic and had tremendous amount of belief in us that he wanted to see it get done. But on the flip side, I think it helped us see ourselves with a higher level of character and confidence, because that's how he saw us.
And he was willing to stick around.
And he was willing to stick around because he knew we would get it done. And then, so it was a great feeling at the end to get it done, because it proved that he did not, how can I put it? He didn't misjudge us, or he didn't bet on the wrong horse, right? He actually saw that we were individuals of our word. We were individuals that made it happen, and obviously got him to accomplish his goals and his dreams, and at the same time gave us our opportunity for ours.
I really like hearing that, and I think we have a lot of lenders that we work with, right? We've both worked at multiple financial institutions that do business lending. And so to our lending partners out there, I think the best thing that you could hear from this is that you put your borrower's credibility on the line when you lead them down a bad path. So the best thing you can do for any business is give them a quick no.
Yeah.
Don't do that slow no, right? If you really don't think you can get a deal done, then just pass on it, because there are plenty of opportunities out there. But what you can do is damage the trust of your borrower.
Yeah.
And I know for financial institutions, it's bad enough they have to say no to a lending transaction. Now, if you led someone on along, you're going to lose that relationship entirely.
Yeah.
And I think that's something we credit ourselves for, is we're able to work with those financial institutions and help them keep a relationship when they can't get the deal done.
Yeah, because there's so much that has to be invested when you acquire a business, and when you're acquiring not just a business, but a real estate property as well.
Yeah.
You have to pay for appraisals and business appraisals. And so, when a lender, when they have an opportunity to look at a deal, it's important to let that buyer know early on as possible before they start making sizable investments into this, because we were so far into it between the earnest money and the earnest money going hard and the appraisals and the business the business appraisals that we
tens of thousands.
Yeah, it was either walk away from tens of thousands or buy it, and we weren't walking away from tens of thousands, so we had no choice but to buy it.
Yeah. Well, I love hearing that it was successful. Congratulations on buying a business you know very little or nothing about.
Yeah.
I think that is part of the entrepreneurial dream. And people don't understand that you can utilize SBA, you can utilize conventional lending, you can partner, sounds like a couple lenders together if need be, in order to get a transaction closed.
Yeah.
So what are your closing thoughts for anyone out there that's listening today?
My closing thoughts would be, if you have a business idea or a business opportunity, just know that there are partners out there that will help you reach that dream. But the first thing you got to make certain, is it a dream you really want? And is it a dream you're willing to sacrifice everything for? Because that's going to play into the 5 C's, right? And that's going to also tell the lenders, do you truly love this? Are you in love with this? Just like if you're in a relationship, are you willing to sacrifice it all for what you want to go after? If you're willing to do that, there are partners, there's Lyft that's out there, there are lenders that are out there that we have access to, and I've learned to find access to through my journey, that will help you find a way to reach your dream. But they want to make certain that you are just as committed to this dream as they are. They can't dream. They can't execute the dream for you.
Yeah.
They have to realize you have the time, the commitment, the wherewithal, the understanding. You are willing to put in everything to this, in order for them to say, okay, we'll meet you halfway, or we'll meet you 3/4 of the way, or we'll meet you only a quarter of the way. They'll make that determination, but you have to want it more than they do.
Yeah. I really like that. And I know we helped some clients recently, and they said something that was so amazing, that we really truly believe this, that at Lyft, we're here to help entrepreneurs dream. And so if you're not dreaming big, then we challenge you to challenge that dream, because you may be able to execute some amazing things when you start taking those steps of faith.
Yeah,
so
absolutely.
Really appreciate you being our guest. Appreciate you so much as our co-host.
Yeah.
So I'm Steven.
I'm Morris Jackson.
And this has been Lending Love Languages. We appreciate you joining us today. And if you need help with your lending journey, you need a better understanding of the process, check out Lyft, because we're here to help. Have a great day, everyone.
Thank you.